Welcome back to TopstepTV. Boy, I think I said that too loud. We have Anne-Marie in the middle, one of the favorite guests. They're all favorite guests. And we have Joby hanging out on the other side. We all know who Joby is. You're going to get a second dosing of him, too. He's going to be on here for Power Hour after this. So welcome to the
Yeah.
show. Anne-Marie, always good to see you. Joby, I talk to you all the time, but hello anyway.
Hello.
This session on Strategy Lab, as you can see behind me, we got all this freaky stuff going on back here. We're just going to talk a little bit about moving averages. It's a common thing, whether you use them or don't use them, totally fine. If you did and no longer do, or if you don't and want to, this segment is for you. We all have different looks at them. We all have different opinions, different uses, and different setups. So I know Joby doesn't because he's a range trader. He's pulling these other ends, and I know Anne-Marie's got a couple. And we know that a lot of our hosts on television, on Topstep TV, use them as well. So let's go through them.
Yeah,
whenever I try to do something like this, you know I got to be a little bit different. So we're going to put a couple different twists in some of these and see if we can get something else fun working for you. So Anne-Marie, I would like to start with you because I've been following David Green, right, and taking a look at what they were doing with their MAs. So I want to kick it over to you and share your thoughts on that.
So I always find David Green's segments entertaining for all kinds of reasons. But I like Dolby's very chill when he manages through the ups and downs of the Peter Tuchman interviews and such. And so Peter Tuchman said today, and I think that was Peter Tuchman, wasn't it, Dolby?
Mm-hmm. Oh, yeah, that was Peter.
Yeah. So he said, hey, listen, we use the 9 and the 15 moving averages to trade. And so I don't use moving averages to trade, but I can see how perhaps you could use them. And so what I want to do is, let me see if I can open up just one of these. Move that over to the side. And what I have are Peter Tuchman's 9 and 15 that he talked about. I thought it was 15, and I have 14 in here. 15 and 9. All right, and let's use like. So I'm going to use exponential moving averages so that you can see that. So when you're a trader and you're looking at simple systems, you can use moving average crossovers very well. And many times it can do just exactly what you want it to do. Here's the problem with using a moving average when price action is not going anywhere. And so, of course, that leads to the following that says, listen, I've got to figure out when moving averages, when price action isn't going anywhere, because if that's the case, I don't need to use moving average crossovers to tell me when to get into a trade. And so that is very important for those of you that have traded with moving averages and you go, this sucks, or you seem to find that it's a great place and you go, I love moving averages. There's a space that they work and a space that they don't. And so the key event is, one, to establish where it might work, and then two, to be sure that you get in when that time allows. And so just a bit ago, I have the 1 hour chart, but what I'm going to do is go into something like, I don't know, let's go to 5 minutes. And you can see this is my VWAP. I'm not going to take it off because I am looking at the charts. But you can look at this and go, oh, if I'm looking at a 5 minute and all I want to do is trade a crossover right there where my cursor is, you can see it as I wiggle it right there. That's really where the crossover is. Now, the technique isn't that you simply buy on the close of the crossover, particularly if you've got moving averages that are flat. It will tell you it is very likely to come in and test the candlesticks that gave you the crossover in the first place. So you can see here, using a 5-minute, it would tell you, here we have this moving upwards. So you go, all right, I'm going to buy the pullback into this region, and you're going to hold it until it crosses over again. Now, obviously, that's not something that I love doing because I am a huge fan of trading into known resistances or known supports. But that's how you would enter the trade. And if you were holding it on a crossover, then you would get out over here. Now, you could say, well, holy cow, Anne-Marie, that took me from 953, 956, all the way up to 19,612. Yes, but you have to live through this heartache first. And so for me, that's super intense. I have a very hard time doing that. So let's look at real time. Real time, we have moving averages that look like they're going to cross over, right? But they haven't yet. So that's not an execution that trades to the short. Also, I should tell you that if you use something like a 9 and a 15, like Peter Tuchman talked about, notice this crossover was negative here. The retest, because the moving averages are flat, it tells you to retest. The retest would have given you the short, and then you'd have gotten blown out of the trade as it ran through your stop. So there's a bigger picture there that says, okay, if I'm trading the 9 and the 15 crossover, like we might get to be seeing here, the question is there something bigger floating around that tells us buying action might still hold up the short? And this, of course, would be where I would anchor a VWAP. Where in the world? Here we go. I would anchor a VWAP at the high volume candle, and it would say, if I took a short of that VWAP and then immediately recovered, I probably do not have a good short going. Okay? But really, to be very honest, any system well executed with your ideas focused on how can I manage my risk, you're going to be able to make money. You will. And it's this system that he uses. I've never used a 9 and 15. But because Robert and I talked about these moving averages, I said, all right, let's go have a look. And I know how moving average crossover mechanics work. So let's have a look-see. Let's see how that goes. And so this is exactly it. Now you might go, good grief, that's noisy as all get out. 3 lines floating there. But those lines are really telling you a story. And they're saying, hey, we're staying above here. And that VWAP is super important. So as this fades, right, we're seeing, we're getting ready to have a moving average crossover. Here's the thing. This is a positive trend that could have a negative rollover. So it's telling us, wait for the bounce. Wait for the bounce. And because buyers are going to come in. And they're either going to come in at this congestion level, at around 19,640, or they could come in at 19,627, or they could come in at 19,605, right? If I were sitting in this space, I would say, you know what? I'm going to have something at 19,609. If it comes to me, great, but I'm anticipating a bounce because of the overall slope of the moving average. All right, that's my approach to trading moving averages.
I'm good you clarified that. Yeah.
I was going to say, Dobie, that's exactly right to clarify it. So, Dobie, what's your approach on it? Everybody's different. I see the chat lighting up like, you don't do that. You can't have this. And that's not how it works. You know what? Fine. Do it your way. I'm not being rude. Just like everybody's going to be a little different. Okay, you may use a 20. What instrument, what time frame, what settings are open, closed? Are you averaging them? Some people don't use them at all. Some look at them just for direction. Some use crossovers. So just, ease up, folks. Like, seriously, we're trying to just show you a few things here. We're giving different examples. We're all going to share our thoughts. Like it, leave it, don't use it, totally fine. Just giving some perspective on some other ways to use things, some other opportunities. Dobie, I don't think that you use them at all. And share your thoughts, man. The floor is yours.
Yeah. I just wanted to clarify for chat. We're not trying to describe David Green's strategy. We're just using similar moving averages and a way to use moving averages. Personally, I don't use them. I find them to be how do I say this? A little bit confusing, and I don't feel like I was getting good entries.
Yeah, they're super noisy.
Relative to risk. So when you're in a trading combine or a situation in which you have relatively tight risk on the day, say a couple $100, I don't like giving up that extra, let's call it premium, to hop into a moving average trade. I just don't want to accept the extra risk that's associated with, I would consider to be a weak trade location. Now, there are ways in which at least David Green has explained, and I've done a lot of sessions with him, so I can feel somewhat comfortable describing this. And if someone in chat wants to correct me, they can. There is a far from moving average trade where I think it's the 200-day moving average, and you have the shorter term time frames really starting to widen. But he's using that as a level to trade off of, not necessarily using a crossover for that. I think the simplest strategy that we typically see for moving averages is the moving average crossover. That's where you get the golden cross, which is the 50 EMA over the 200 EMA, and I think that's used more for stocks and investing. That signifies a major uptrend. I just find it for day trading in particular, it tends to be just a very, very noisy kind of thing on my chart that doesn't. I don't really want to know the average. I want to know the extremes, because the average to me is 50-50. On the extremes is where you get 80-20s or 90-10s, and that's where I think the odds are better in your favor as a trader. It's kind of the same reason why I don't like VWAP. I don't really care about the average. I want to hang out in the extremes of the trading session, because that's where the cheapest trades are and the best opportunity is. Now, there are traders who use moving averages really well. For me, they're just the entry location is not good enough. So I think if someone is using moving averages, they're probably, if I had to guess, pretty good at scalping and pretty good at getting in and out of trades, if I had to imagine. Or you're just waiting for trend days. But that's the other thing too. If you're an impatient trader using moving averages and you don't have the patience to wait for your setup, you're just going to get chopped up and kind of perpetually. That's just my thoughts on it. Robert, where are you at on moving averages?
Yeah, thanks, Toby, and thank you for Anne-Marie. We're all going to share a little bit of our opinions here. We got some time to talk about things here. My opinion, again, of moving averages is they're directional, and I don't use them simply for the fact that I'm not that type of a trader, right? If you are a person that likes to buy and to hold, and you want to just maintain that direction, it might not be a bad choice. But how do you go through your setups? What are the settings? What time frame do you use? I don't even trade on time candles. So moving averages to me, if we have a market, on my chart, if we have the market coming up to a certain area, and then price action, there it is. I'll draw it right here so y'all can see what I'm doing. This is recorded so we get to see it. If I have a moving average and it's coming up, and I'm going to put one on in a second, but see how we got to this particular area right here? It ranged a bit. I'm saying right here just because I'm highlighting the chart, okay? I don't know, 600 to 650-ish. Okay, now time is going by, so it's going to continue to plot candles. What happens to this moving average is it starts to smooth out. Okay, it starts to smooth out. And then when the price action starts moving up again, it's going to start curling up. That's how it works. That's what I don't want to see. So me being my coveted range bars, it doesn't base it on time. So in this area that I highlighted, it's around 850 to 1050. So a 2-hour time frame, there might only be 5 or 6 or 7 bars, range bars in that area. So it's not going to impact that moving average as much. I'm not going to have a whole slew going, okay, we've added more periods into our moving average. So our division over time is going to skew that moving average and saying, yeah, this price didn't really do anything. It's going to level it off. And although agreed, in my opinion, it's not as relevant to actual price. Okay, and when we get this, I'm going to continue on doing this, and we get range bars and stuff in. I'll show you how this actually looks different. We'll plot some things up. I'll make some recordings of it. We'll say, hey, this is what it looks like on this chart. Now let's flip it over and like, oh my goodness, okay? So it's just a little bit of a difference there. Now here's something I'm going to show you as well, seeing that we're on my chart. I am going to plot two EMAs on the chart. Okay, bam and bam. Let me slow this down to speed this up to 1 minute, just for the sake of it. Here we are, we're looking at an NQ 1 minute chart. I have two moving averages. One of them is a 20 EMA, you can see on the top left, and that is in green. The other one is a 25 EMA, and that is in red. I can probably change the colors. I'll expand it so we can see a little bit better, just to make sure we don't blindly go in here. Now, what have I done differently? The EMA, that's a 20, is calculated on the close. So it's calculating the closing price, but giving us a faster reaction to it. The open is giving us a 25, so it's looking longer back at the open of the candle. So what is that doing? Well, it's going to give us, I don't want to say a crossover, but it's going to give us a more responsive directional movement. I'm going to highlight two areas. Right here's one. There's our green is below a red. We have a really nice dump right here. Here our green goes back above our red. Why? They're different lengths. They are 20 moving average on the close, 25 on the open. So it's going to slow it down a bit on the open side to make sure we're going in the right direction. Here we have it going up. Boom, right there. And we have a little chop fest. Here is our green above our red, right? So we have our close is getting a faster reaction. If our close is going up further and faster, what do we have? This entire movement. So I do things, again, slightly a little different, but I always want to play with these. This is a very basic 20 exponential moving average. And all I did was made them different lengths and then calculated one on the open and one on the close. And it looks, in my opinion, it looks entirely different. If I threw a different one on here and just stuck it on, all right, I'm going to throw a 20 moving average, stick it on close, and that's it. All right, so let's use a 20 and a 50 and use a crossover, 20 and 50. Well, it's going to take 50 periods for it to cross, but you're still calculating on the close. And again, I'm not saying this is right or wrong. I just wanted to throw a different example, a different option to look at these differently. And how many moving averages do we have? I'm going to click on indicators. I'm going to kick it back over to
we got
Anne-Marie.
a question from Anne-Marie.
I'm on Topstep X, and I'm going to list them all right there. Go for it. What's the question, Anne-Marie? I didn't see you waving your hand there.
Robert, I wondered, could you show folks how to anchor them from the open and the close?
Absolutely. So let's add a brand new one to the chart. Indicators. I'm going to type. You can actually type in EMA and it will show up. It actually has it set up in the to look at the short name. But click exponential moving average. It puts it over to the left here on my indicators. There's a gear right here, and let's make this one 50 just to make it a little bit different. There's my length, 50 periods. If I'm looking at a minute chart, it's 50 minutes. If I look at an hourly chart, it's 50 hours. Okay, so it's a 50. I hear traders will say sometimes like, I have a 50-day moving average, and I'm looking at their chart as 5 minutes. It's not a 50-day moving average in that case. It's a 50-period moving average. We're not going to use a smoothing line. It's the SMA. If I go to my style, notice it's unchecked. It just gives you the choppiness, and it kind of just averages out the average. It's going to be a little confusing. I'm going to get white here, and let's make it a little bit thicker so we can see it a little better. Under the inputs, the source. I have an option. I can say calculate on all the open prices for 50 periods, or the high, or the low, or the close. We can do the high and low divided by 2, which is the candle average. High, low, close divided by 3, so it's the average of high, low, and the close. But because it's a close, it's going to give a little more weight in that direction of the close of the candle. And then open, high, low, close divided by 4. That's your true amount. Open, high, low, close divides by 4. Cool. That's a real average number for that candle. So in this particular case, I'm just curious. Let's leave it on close for a moment. There it is. It's white line. There's your 50 period moving average on calculated on close. Okay. So some traders might want to use a 20 when it crosses 50, 50 when it crosses 100. whichever way you want to do it, it is really going to matter what you're trading and what time frames. Okay, let's take this entire chart and I'm going to click on 30 minutes just for the heck of it. All right, now chat, you tell me, do those make sense? Maybe it does, maybe it doesn't. Look at your 50 moving average. There it is. This is a 50 moving average on close. That's pretty good. Look where our green crossed our red. Yep, we're coming down. Not too bad. But this is saving us, in my opinion. We have that green crossing down. It's a little bit slower. And then we're calculating again. One is on the open, one's on the close. All right? You can do different areas. You can say, all right, let's use an exponential moving average, which gives more weight to the more recent candles. And then a simple moving average for the longer trend. It kind of smooths it out a little bit. So I don't know. I just want to give those types of examples and some other options, and we'll go through a few more. But yeah, let's kick it back over to our guest, Anne-Marie for Strategy Lab. I'd like to hear your thoughts about messing with some of the default settings and just being, what do they call it, the black swan here, and just black swan's an event, but the outlier going, nah, I don't want the norm. We're going to do something a little bit different. What do you think?
So my philosophy about technical indicators are, in general, they're what's the word? Is it self-prophesying? Is that what
self-actualized? I think, yeah.
Yeah. Oh, yeah.
Self-fulfilling prophecy.
There it is.
Yes, there
That's the
you
one.
go. Thank you. Between the three of us, we got it. So they're self-fulfilling prophecies. Now, what does that mean? If everyone looks at the VWAP, and by everyone I mean a large majority, then as we come into the VWAP from above, people are going to buy it. If we come into the VWAP from below, people are going to sell it. And so we look at that and we go, oh my gosh, look at that. A bounce right off the VWAP. Or look at that, a fade right off the VWAP. At the end of the day, the philosophy tells us how to implement the strategy. And so why am I starting with that example? I'm starting with that example because I am not a fan of esoteric indicators or esoteric shifts being used in the approach, because at the end of the day, it's the most number of people acting in the biggest spot that's going to create the real move. And so that's why I like to look at daily formations, daily highs, daily lows, daily opens, daily closes, and then sit in the space that goes, all right, everybody knows that this is where we closed. And so if we've had higher lows all day, then if we get into the close and start breaking above it, we're probably going to continue in the direction of that motion because everybody's watching that. And by and large, if we break the close of a prior day, it means that the buyers are in charge if that close is actually higher, right? As opposed to the close being low and us breaking it that way. And so my thought is you might be able to use it in one way or another, but at the end of the day, the goal is try to be as generic as possible in my mind, which is very different to Robert's. My goal is to say, let's try to be as generic as possible. What is everyone else looking at? And then we can go, oh, well, if everyone else is looking there, then they probably have their stops too tight. And so if they have their stops too tight, their stops are going to get run. And if their stops are going to get run, probably going to come into, some old resistance, new support area right around here. And that's probably where the buyers are going to show up, somewhere near there. And so that's really how I look at the market. But again, I consider myself a simpleton. I look at prices, I look at the pictures. If the pictures are moving sideways, I trade a range. If the pictures are moving up, I'll try to catch the trend. If the pictures are moving down, I'll try to catch the trend. And then, the chips fall where they may. because I'm always managing risk first. So I didn't mean to make the chat blow up. I just,
It doesn't
you
matter. You
know,
can't help
I'm
that.
just,
Not a big deal.
I'm a simpleton about trading. I really am.
It's a passionate group
Exactly,
in chat.
exactly. Yeah, we love your input, and everybody's going to trade them differently. Some trade a bounce, some trade a cross. We're just giving some different examples on here. We know a bit about them, and what we don't know, we're not going to share on. So, Dobie, what are your thoughts on what Anne-Marie says? And I'm going to share another little tidbit of information.
Yeah, I mean, I think the thing that really stuck out to me is, making sure that you have a system that other market participants are seeing and also respect. This is something that I went through when I was new to trading, is that, I'm going to stack 2 to 3 indicators on my chart, and then when everything aligns, that's when I'm going to take my trade. The problem is that the more stuff you stack, the further away you're getting from what other market participants are seeing, and you might not necessarily get that immediate price action that you're expecting. And so maybe you think you're developing an edge, but really you're kind of just this trader out in the middle of nowhere speaking a language that no one else is understanding, because you're 3 indicators deep looking for a MACD crossover that aligns with a stochastic that aligns with a moving average crossover, or whatever the example is. But I think that's a really good point, and this is kind of why I like sticking to like one sort of framework. So for me, it's range bound trading. Everything to me is either a box or not a box. For traders like Brian Shannon, he uses anchored VWAP. That's like a core part of his strategy. Professional trader, works for him. David Green, he has a grouping set of EMAs that he uses. That's his framework. And he has I think almost 4 or 5 setups that revolve around either some combination of moving average or stochastic. But that's his framework. That's how he views the market, and he's able to define risk in his system. So, these are all people who have a framework that is simple to them that they use to help define and manage risk and find profitable trades. So really any system can work. I'm worried of when there's too much on the chart, there's too many indicators, and then you're getting further and further away from what other market participants are seeing. I like ranges because I feel like everyone is seeing that on the chart. It's like how often do you open up a chart, you draw the most obvious lines in the world, and they end up being support, resistance, or trend lines, and it's because everybody else in the world is also seeing the same thing. And I think a good indication of is, are you trading in the right spot, is, are you immediately getting price action that you like? And if you're not immediately getting price action that you like, you're probably not resonating with the rest of the market. And take that as a sign to maybe pull a trade quickly or reconsider how you're viewing the market. But I think it's super important to have one simple framework that you understand as a trader, and then start fitting in bits and pieces into that to develop a fully rounded system.
Oh, that's
Exactly.
great
That's well
feedback.
said. And yeah, I keep going back to just every trader is different. And it's kind of funny. We want to keep on absolutes. So this is the MA you should use. You should never use MAs. Those are just different. What do we have? We have VWAP, right? We have Brian Shannon's made a career out of trading nothing but VWAP. All right. Yeah, but it doesn't work. Okay, great. Moving averages, don't use those. They're horrible. Yeah, David Green's made a wonderful career of using those things. It just really depends. Order flow, don't use that. It's too hard. Nope, there's a massive amount of awesome order flow traders. So we're just trying to share information here, give a little bit different experience. And my point with that is let's not stick with the absolutes. I just turned VWAP on my chart. I'm gonna shut off those 2 MAs just for the heck of it for a moment. There's VWAP. So here's a rule for you. Ready? Only short under VWAP. Really? Okay, well, here's VWAP. And am I going to short right there? You tell me. I don't think so. So to say I only short under VWAP, okay, really? It's a hard set of rules. Now what we're just doing here is just giving some examples, some different alternatives to look at, and maybe it will help for trading, right? Here's a really cool layout here. How about this one for moving averages? What do you think of that? There's some cool looking moving averages on that screen, isn't there? I know some really cool traders who trade bonds and stuff like this, and they absolutely destroy it. So let's just really go back and and reel it in. Just say, hey, if it's going to work for you, cool. If it doesn't, that's all right. No problem. No big deal. I'm with Dobie. I don't use them. I'm a not necessarily range trader, but if you want to classify me as like a breakout type of trader person, that's what I look for. I have a pivot and I have another pivot, and I say, geez, when you come up over this area, I'm going to take a piece out of the top up here to the right. That's what I do. Does it work all the time? Nope. Does it work good enough for me and what I'm doing? Absolutely. And that's what I did. I made that little calculator over here that I play with during the day, and a different segment will show you how to do that. But that's exactly what I do. I put my pivots in here. I hit calculate, and it gives me a target area, and I place a trade. I will be doing that on my live when we're able to do those types of segments. But right now, Anne-Marie, what's your feedback?
You know, I do. I love what you're saying. Here's something that I would consider someone can use as a takeaway. So let's say you just come into the trading space and you're really trying to find your way. You get your practice account up, you get your combine, and you use your practice account together. And then just start with something simple like 2 moving averages, not a ribbon, just 2. And of course, some people trade the bounce, some people trade the cross. Your goal is to say, okay, if I look at this chart and I take my trade here in the direction of trend, how much risk will I take on by taking this position? Because at the end of the day, simple moving averages are very easy to use from a mechanical perspective. But what we do not realize is that before we enter off of a strategy, we've got to define our risk. So every single thing that we're talking about says, hey, listen, you got to define your risk. And my favorite way to define risk is look to the left. Mm-hmm. And if you go, oh, all right, well, that tells me I can buy over here. How far might this move against me? Look to the left and see. So this was the first place. If I were trading a crossover, this would have been the first place that it would have opened up. And if I had said, hey, I want to take this trade long right out of here, my support would be down here at 538 when the buy zone is really at 550. So the question might be, whoa, using those moving averages on a 5-minute chart, that's a really wide risk. I might need to take just one contract, or I might need to wait for the risk event to get smaller. And how does that happen? You wait for it to hold, and you see buyers, 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 buyers. So now if you buy here at 558, all of a sudden your stop becomes 550. And what does that mean? It means you got to have patience. And if you want to make it into a space where you don't have an average or portfolio balance that continually is going through peaks and valleys, you got to go, listen, I got to sit on my hands until price comes to me. And you're going to figure out, sometimes you're going to go, oh my gosh, I'm being too much of a cheapskate. I only want to have, 4 points of risk, and the market will not give it to you. When you come in, every day the market goes, listen, here's our risk threshold today. Can you take it? Great. You got to find it and then use it, because some days it's going to be 15 points wide. Some days it's going to be 5 points wide. Some days it's going to be 35 points wide. You just have to go, whoa, I don't know that I could trade there today. That looks a bit rough, and go from there. But simple moving averages are a great way to begin to build a strategy that's got a very simple event for enter, determine risk, set your size off of that risk event, And then as long as those averages are pointing up and you're making higher highs and higher lows, you're in great shape. Once it starts doing something else with trend, then you go, all right, things are getting a little bit crazy up here. I probably need to get out of this long for now and just be very happy with my gains. But again, that's 60 points of gains if you had taken it in that pre-market event at the retest of the formation. So it works. You just have to be very patient, very focused, very present.
I'm going to speak for myself here. Like I think almost every trader has a moving average phase that they go through. It's such a common indicator, and I think, ooh, very popular. So is your
$10 to the fun.
laundry done?
$10 to the fun on that.
Anne-Marie's laundry's done. That's the timer for the dryer. What happened to me, and I actually think moving averages as far as like crossovers go is a fairly advanced system to use, because I think it's a system in which you really have to know when not to trade. And I don't necessarily think that is a strength for new traders. Because if you're in a trading combine and you're using moving averages and you're not getting the separation that you want to see in the moving averages, you have to make sure that you are not taking trades. And that is very, very hard to do if you're a new trader. So I think it's a system that requires a lot of discipline and patience if you are going to do it. And I think, ironically, that's a skill set that is really hard for new traders to have, because they constantly want to get into the market, they want screen time, and they want to get reps. But maybe a moving average system is telling you don't trade for like 3 or 4 days. If we're range bound, moving averages could just be woven completely, and you're basically being asked to not place trades. Well, if you're a new trader, that's not fun. Like, that's not fun at all.
Yeah, that's a great segue. I was going to just demonstrate that too, Dobie, the weaving between them and how they're crisscrossing. And I hope it has a name for it. I can't remember what it's called. Maybe somebody can educate me. But great. Thank you. Production. There is my chart. What I did was I threw 5 moving averages on here, all 50 period, but they're all 50 period, all calculated on the close, but they were all different types of moving averages. And all I did was I went on to indicators, I typed in the word moving, and I just went through. I was like, click, 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 click. There's a whole bunch of different types of moving averages. So pick your poison. There you have it. Okay, we can see the colors on here. If you can see, yeah, you can see them. The white line is the EMA. The blue one is WMA. And look at the difference on them. Let's zoom in a little bit. Okay, so which one do you use and when? Which do you follow? If you want to talk like someone's saying, maybe a crossover doesn't work. What if you use 2 different moving averages on 2 different calculations, an open and a close? It might work fabulously. Look at this orange one. What the heck is this orange one? Oh, orange one says HMA. You know what that is? That's a hull. That's a hull moving average.
Yeah,
and you can look up all of these calculations, and see what they do. It's good. It's a different formula, Dobie. It's I don't know that calculation off the top of my head. I know a couple of them.
It's a smoothening. Yeah, it's a smoothening average, so it doesn't have all the wiggles, but it is absolutely beautiful. It's beautiful.
All those calculations are great. Look at this purple one. What's that purple one? That purple one is a moving average adaptive. Look at this. Look what happened. You can see it dropping in this area, and then all of a sudden just boom, abrupt stop, change direction. Whoop, Why? We had this pushing down. The market was pushing down this area, all these red candles, and we had a big push up, and this adaptive moving average said, hang on, time out. You're not going down anymore. You had a big push up. I better flatten myself out. See? So they're all different. That orange one right there, that's your hull. It's going to smooth it out, but it's a quicker reaction. So what if we use a hull that crosses an adaptive? I don't know. I don't have that answer. So what we're doing is educating here, showing and giving different examples rather than just getting stuck in a zone and being like, well, they said to do 100 simple moving average and only take longs over it. We're trying to open the mind. This is what the strategy lab is all about. This is why we have all these funny calculations and stuff up here that Anne-Marie always geek out on and in Discord. She's a hoot. It's amazing. So just educational stuff, man. And look how these are braided. That's the word. They're braided. But look at our hull. That orange one, dang, that looks pretty sweet. What if we're holding the orange one to maintain that direction? We look at the purple one and say, nah, that's going to be a little cheat area to help me get in and out quicker. Beautiful. It might be an option for you. Just a presentation. Anne-Marie, can I put you on the hot seat right here for a minute? Because you told us something in the green room. Can I mention that? Yeah?
Yeah, sure. I don't remember,
okay.
but yeah, go ahead.
So, I can mention it. You're cool.
I'm an open book. Go ahead.
Yeah, so I was going to say that these can help with your psychology of taking you in the direction. And then we're in the green room. We were talking a little bit beforehand, getting set up. And Anne-Marie goes, you know what? I'm doing a psychological profile, trading profile on all of you here. And I'm like, all right, that's the last thing I'm saying for today. That's it. I'm done. So I can't wait to hear it. I can't wait to hear it. And Shad, why don't you do it too? Let's invite them. Throw your psychological profile. You can beat me up. Go ahead. Throw. What's my psychological profile? You're not going to hurt my feelings. Trust me. Okay, back at it. Gobi, do you see any trades going on? I know you're looking for a trade here using your system, your ranges. Talk to me then.
Yeah, I had some bids in the MNQ at right around 630 and a half, and I missed it by a couple ticks. But what I was trying to do was actually get long one at like 632, or sorry, at like 631-ish, and then another one just below 628. And the reason being is because we have a 30-minute range, and I like trading ranges, and we've been bouncing there a couple times. And so really, I was just trying to basically buy the bottom of the 30-minute range. I was looking, and I actually learned. I took notes and I journaled from my mistake yesterday, because what I initially was looking at was a 5-minute range, which is closer to 19,640. But then I was like, wait, I made this mistake yesterday where I was too focused on a smaller range within a bigger range. So then I was like, okay, what's the bigger range of play? And it's like, actually, it's a 30-minute. That one's a little bit more respected, but I just didn't get filled on those stops. So that decision moved my entry from what would have been 640 down to around 630, so almost a 10-point difference. So that could have been the difference between getting into a trade and stopped out versus having a trade getting filled and getting bounced in your favor almost immediately. So I missed that one, unfortunately. But I am looking forward to playing this range in the NQ for Power Hour and maybe even the house account here. So I'm still looking for continuation to the upside, but just barely missed that entry on that range entry on the bottom of the 30-minute. So close, yet so far away. This is a game of ticks, as they say.
It is, absolutely. No doubt about it. What I think is interesting is that, this morning on Fast Markets, or I don't remember what it was. Yeah, it was Fast Markets with Dakota thinking, hey, I'm going to see upside. And he's completely right. It just took hours of downside grinding to clear away all of that inventory down there and all of the noise to push us back to the upside. So I do think that we potentially see upside pressure, but there are a lot of sellers at that 676. The dome looks like people are really trying to defend that as the short side, and if they don't, it's going to really gum up the works. We could see 700 this afternoon with the stops getting run.
Yeah. 700? Yeah, I could see that. I would be very interested in trying a short at like 691. Maybe even a little bit
I
of
see that number too, right? The prior high.
The prior high, and maybe because it's NASDAQ, it wants to run an extra 10 points or so. So maybe there's something to be said about shorting like 710s.
Yeah, exactly. 710 to 714
might be a little bit better.
Yeah.
We only have about 10 minutes left. I do want to actually talk about a certain situation. Anne-Marie, because Gabe is kind of going through this right now. He's trading on air. He's trading with big personalities. And I think, being a new trader and having conviction in your ideas is so important, especially in the face of chat, in face of your peers. And Anne-Marie, I've never told you this, but you actually were a part of a very big part of my kind of growth as a trader on TopstepTV. There was a moment, and this was probably a couple months ago, in which I was getting my feet wet, and there was a trade I was in, consolidation trade of some sort, and I was having a hard time with conviction in my trades. And you came in and you didn't necessarily poo-poo the trade, but you didn't give it its blessing, let's say. I don't know what that noise is. Oh, if you want to mute yourself in the green room, that'd be fantastic. But you necessarily didn't give your blessing to this trade, but I had conviction and I had so much respect for you. It was so hard for me to hold it, but I did hold it, and it was a winning trade. And ever since then, that was like my Waterloo, in which, you know what, damn it, this is my trade. I'm going to take it. And I did.
Exactly.
And it was a profound experience that I could hold something against a peer's thought or chat's thoughts. And it built a lot of character for me as a trader. I'm wondering if you ever had a situation that was similar that helped you grow as a trader.
Oh, something just like that. Things just like that. Every day I sit and somebody will say, "Oh, this is long," or "Oh, this is a short," or on TopstepTV, because I literally, except for when I'm in meetings doing other things, it's always on. And so very often I'll see a trade and I'll go, "Ooh, I was looking at the other side of that." And all right, if I'm wrong, did I manage the risk? And that's all that really ends up mattering, because I don't see the market the way any other person sees the market. We all see it in a unique fashion. And so it really is an anchoring space where you go, I know she doesn't like it, but nobody's right all the time. I like it. Have I managed my risk? Do I see what's going to happen? I'm going to stick this out. And I do that all the time. I trade against Dakota. I trade against Jay. I trade against just about everybody every once in a while. And it's because I go, okay, I know that Jay is long and I am short, or whatever it was. Yesterday, that was the nearest time. But we entered and exited on different timelines, but we're both in the trade in opposite directions, and it worked. And so it's all about, have you managed the risk? Have you set it? But I fight that battle every day, because I am, oh my gosh, I'm so bad at second guessing myself. I am the queen of second guessing. And so it always brings me back to, okay, Dobie's got a short here. He's doing that. I was long right there. Wait, what didn't I see that he sees? Okay, I need to get out of that trade, because it makes me go, let me look at that again. And then the flip side of that is, no, I think I'm okay. I have the risk where I want it. If it doesn't continue, I'm just going to get out, but I'm good with that. And it really, your ability to hold two opposing ideas in your mind and either eliminate one or verify one is a very important skill in trading. And it all comes back down to you as an individual and where you've put your risk.
Yeah.
So I love hearing that. But yeah, I battle it every day.
Very well said. You use your own process and you look over and you'd be like, right on screen, it's like, trader one on screen is at one long, trader one is on other here, short, and you're like, what am I going to do? So if you follow your process, sometimes it matches trader one, sometimes it matches trader two. Thanks for switching to my chart. I want to show you all something. We talked about all these moving averages, and people didn't ask me what I do. That's my quick tutorial right there. There you go. I have my little calculator. I added it in. I plotted two different zones. Here's the bottom of it right here. You can see my lower pivot. Here's my upper pivot right there. I added it in. It gave me this zone to trade into. When this pivot broke, what did it do? Right into it. Does it work all the time? Hell no. But let's do a live one right on the chart, right on screen here. This is 19,676. I'm averaging it 19,676. We'll put that in there, and I'm going to take the bottom pivot, which is right at this point, 19,629. 19,629. I'm gonna click on a little calculate, and that's what it's telling me to trade at. That's what it's giving me from my zone, 618 to 612. So if it breaks this low point here, I just want to give you a little, you can watch it for next session. We'll see if it worked. It might not, but I wanted to show if I don't use, you called us, like, you're talking moving averages, you don't use them. Hey, it's a training session. This is what I do. Anne-Marie talked about what she does. You're going to see what Dobie does right next on Power Hour. So that's what I do. Pull these pivot points, find a target area, and that's what it's telling me. 19,618, and my other one is 19,612, and that's my story, and I'm sticking to it. We break below those lows. That's my target area. You're only talking about 12 points away. It's about $240 in one contract. Do that twice. I'm happy with it. We are 1:57 here in Central Time, so we do need to wrap it up, get the others in the green room going. Appreciate everybody listening. Hope you did learn something. Like it, don't do it, do it. Maybe you'll try it. Maybe you wanted it and now you don't. Totally fine. Everybody trades different. Love hearing your side of things, Anne-Marie, as always. Dobie, always appreciate yours as well. We're going to see more of you coming up. We have Dobie driving the Power Hour next. We have Gabe. Gabe's coming on. We saw him this morning doing some trading too. Good man. JD, behind the scenes, doing a lot of work. In fact, he's over there right now. Hi, JD. And Coach Ray. Coach Ray is going to join us up there. I just saw him pop in a moment ago also. It's a great Power Hour. Stick around. Let's see if these markets can shake it up, whether it's up, whether it's down. We can lock it up in positive, and we can trade again. Have a great weekend, and I will see you all on Monday, but stay tuned for Power Hour.